Hey guys, Mike here. So, well, what a nice day in the market yesterday. Got some green going on there finally. Some stocks bouncing, some stocks still selling off here. And again, we'll get into a little bit of that. Also, how much of this market is really just made up of AI and AI stocks is pretty staggering numbers. I'll show you in the latest interview I saw with Tom Lee there. Also, getting your questions, a lot of questions about certain stocks, and it kind of led into what I've been looking at for members and stuff about making a list and seeing what's happening and why this reminds me of 2020, 2021. And so, again, we'll get right into it. Tomorrow we'll set up the week and everything, which will be another fun one, I am sure. But remember, guys, this is normal, what we're in right now. We are sitting here in this window of weakness. We talked about it for a long time after September OPEX, what would happen last week of September, coming in October. You can get that window weakness, and we finally did. But check out how much the AI stocks actually make up of all the gains in the market.
AI-related stocks have accounted for 75% of S&P 500 returns, 80% of earnings growth, and 90% of capital spending growth since ChatGPT launched in November of 2022. Now, some would say, well, obviously, and all of that might be justified, but those are large numbers. Those are really large numbers that have carried a boatload of the weight of this move in the market since then.
Yeah, and that's a moment in time, Scott. I mean, just to give some perspective, NVIDIA is about 8% of the S&P 500 market cap weight, but it is also 7% of the earnings. So it's not necessarily distorting equity valuations. And in terms of what companies are excited about, if companies are saying that AI is something where they're actually allocating capital, and many are, of course, are seeing productive gains, I think it's justified that would be what you'd expect to be the first wave of investment and spending is around directly into the ecosystem. But of course, over time, we'd expect that spending then to deliver productivity gains and other benefits. So that means if AI, and I'm comfortable with the idea it's a super cycle, we should see a broadening of the benefits and then also the broadening of opportunities over time. So it's probably a moment in time makes sense, but it should be broadening.
And so I don't know, are we really surprised by that? Not really. I mean, that's what this is all about. Again, that's why I say, is it a bubble? Yeah, sure. I mean, it just keeps pumping. When's it pop? We'll find out, especially on certain stocks. Some of them we'll talk about today, as a matter of fact. But anyway, just let me know your thoughts on that. And I'll lead into the first question. And again, I want to get your opinion on this because this is going to vary for everybody. But one of our members just happened to ask, hey guys, looking for suggestions on my kids' college savings fund. I've just been throwing money in monthly and having it reinvest itself in 14-month CDs, but now that rates suck. Again, I'm thinking trying something like betterment.com for its robot investing. Thoughts? What do you guys do if you're saving for college or something similar? And again, there's many different options on this. I mean, you got the 529 plan, which I think is the most popular. And of course, there's the custodial accounts. I mean, I think it's just about whatever suits you best, right? I mean, I think I did a video on Roth IRAs, for example. I mean, if you start that when they're young, what goes in can be pulled out for the college. It's not what's actually built up in there. Again, check with your accountant. It's been a while since I did that video. But really, it depends on what works better. Like 529 plans, relatives can contribute to that as well, but they can't contribute to the Roth IRA. And so there's just so many different deals with the taxes, who can contribute to it, limits, all of that stuff. So definitely look into it for sure. But yeah, I mean, there's many better options to me than CDs and things like that right now. So, and honestly, you can just call Fidelity. You can call any of them, really, and ask and say, okay, what's the best way to do it? All of them have 529 plans. If that's what you want to do. But there's also a difference is, what happens if the kid don't go to college? What happens to the 529 plan? You also got to make sure you understand that, or whatever vehicle you are using. What if they go in the military and they get a GI Bill? Well, it should pay for most of college, right? So, it's just kind of that kind of stuff you got to pay attention to and look at and stuff. So, but put down there what you're doing for your kids, what you think's best and stuff. I definitely want to hear about it. Next here says, hey Mike, when looking at the charts and different time frames, is there one particular time frame you spend most of your time on as opposed to another? And if you do, why? I actually like this chart right here, because depending on what you're doing. Right? I mean, if you're just day trading, especially if you're scalping, here's the time frames, intraday, swing, long term, the description. And if you just kind of zoom in, I mean, if you're scalping, especially, you're going from a 1 to 15, maybe even day trading from 1 to 15, even though I use all the way up to the 4 hour. By the way, when I'm even looking at a day trade, believe it or not. Swings, obviously going longer here. This one anywhere from the 1 to 4 hour, maybe even your daily and long-term. Of course, you're living on the daily, weekly, and sometimes even the monthly, depending on what you're doing. But I like that chart right there. Heck, take a picture of it. I'll make sure I put that in the Discord for everybody. But that's what I like to do. Again, it's getting the bigger picture on that, say, a higher time frame, whether it's a 15-minute hourly, and then entering on probably a 3 or 5 minute if I'm day trading. So that's what I'm doing there. And of course, investing, I want the longer term outlook, especially where the momentum's at, things of that nature. Next one says, where's Jim Karsan nowadays? He's still around. He actually has his own YouTube channel. I gave you the latest update I found. Even though I think he just did one I got to watch. But he does this You Got Options. He just interviewed Robinhood's CEO, which he has something interesting to say. Also, he's, for whatever reason, really obsessed with martial law. Maybe this will happen, maybe it won't. But he put in here and re-emphasized it just the other day. It was like, basically, watch out for a manufacturer crisis that would necessitate martial law. They're already being drawn in the Oval Office in 3 years or so if this comes to pass. Know that this was not a coincidence. So I don't know the deal with that. I haven't read into it. So, but I saw that the other day, and a lot of people were commenting on it. But I'll try to look for his latest update. Again, I gave you the latest one I could find, and that was simply like, if we end up seeing this window of weakness, we need to see it now to get any kind of sell down. If we don't, the melt up is just going to continue. So we'll see, how much of this weakness we're going to continue to see, where that bottom's at. And things of that nature. So that's what we got to find out. But again, I'll look for an update and see if he says anything new about flows and things of that nature. Next one says, if China can ban their companies from buying NVIDIA chips, can they ban the citizens from buying U.S. equities, leading to a decline in foreign investments in U.S. equities? Can they even buy them right now? Yeah, they can buy them right now, but they already control them. And what they do here, as you can see, it says, no, China's not completely outlawed its citizens from buying U.S. stocks. But what they do is they limit it through this annual foreign exchange limit. So Chinese citizens are typically limited to converting a maximum of 50,000 worth of yuan into foreign currency per year. This heavily restricts the amount of money an individual can invest directly overseas. So the answer is yes, they could completely outlaw them. And I couldn't find exactly how much we're talking about in money-wise, how much they have invested in the U.S. stock market. It doesn't really break it down. At least I couldn't find it by country as far as their citizens and stuff. But yes, absolutely, they can do anything they want to their citizens. So that could absolutely be the case. Next one says, hey, Mike, any thoughts on trade desk, TDD, RSI below 30, 25, I think I've seen. Thanks. I'm actually going to put in here what I put in the members video on Thursday for you to listen to. Trade desk, and these are laggards, right? I try not to talk about stuff that's, already super overextended. This one right here had this double bottom. It's not really going to do much if the market stays weak. But if the market turns, you can see if it gets above this level because it's been sold down so hard, it could move up here. It's actually a repeat, right, of what happened to the left. See the left right there? Had earnings, just absolutely imploded. What saved it was the April 7th low, and that's what we don't have this time. So you had the April 7th low where everything went up, and this thing just started rocketing up. Didn't matter what you report on earnings. Your CEO could take a dump on the desk. The stock was going up, and that's what happened to it. And then you see, obviously, it got rejected right there, that 200 moving average. It came right to 200 earnings and just imploded. Up there, rejected off the 50, 4 straight times. So you can kind of see that in the cards. This is probably going to happen, maybe not this low. I'd have been much happier if it had taken out that low in April, to be totally honest with you, and maybe it will if the market stays weak for sure. But this is just one of those catch-up trades, right? Same thing as Marvel. I mean, we've seen it so many times, right? These catch-up trades where these stocks are just hammered, forgotten about. And you can see the chart's trash because, the 50s ascending down, the 200s ascending down, okay? But when we fix all the boxes here, there are just huge gaps up above. So if we do have a positive turn in the market, this could absolutely benefit from this. So hopefully that helps on trade desk. Now, this leads into these energy companies, right? So what do you think of NNE? I will do the chart. It has nothing to do with whether or not the stock's going to go up and down. With the research part is what I'm going to show you, though. All of these fall in line and follow kind of a theme here, okay? You can see I got 2 trend lines here. It's a high flyer like all the rest of them. We need energy for all of these data centers, things of that nature. And so these are flying. So you can see the support right there is plain as day on the white line for you. Around 35 bucks, okay? It's been selling off like everything else. Got your little double top action going on right there. But there's a theme with all of these stocks, okay? There's like 7 or 8 of them in the energy sector in particular. Low float, highly shorted, okay? Which means they have huge moves to them. And then the other thing is the products, right? And this is on the Russell. A lot of them on the Russell, some of them are not. And so when you go to their website and start looking up like, hey, do they have any sales? Do they have any of this going on? The answer is usually no, okay? Matter of fact, some of them don't even have any sales projected. Some of them have the next year or two. that kind of stuff. And so you can see their advanced technology, and that's another thing. Advanced technology is always on the website. Driven nuclear energy companies seeking to become commercially focused, diversified, and vertically integrated, all that fun stuff. So I just look in here and say, okay, have they received their regulatory approvals, and what's going to happen with the sales? And it says, yes, they've received regulatory approvals, but its micro-reactor technologies have not yet been approved for commercial sale. This is the latest I could find. The company is still in development, pre-revenue stage, but has begun marketing its product to potential clients. Regulatory approvals. Fuel qualifications. In April 2025, NNE announced that the U.S. Nuclear Regulatory Commission had approved its fuel qualification methodology for its Kronos microreactor, a critical step towards the deployment of its prototype licensing process. The company is now moving forward with its construction permit application for the Kronos reactor, which is developed in partnership with the University of Illinois. Then it comes to commercialization efforts. Reactor design sale. In September 2025, NNE signed a letter of intent to sell its Odin portable microreactor designed to a UK-based developer. This highlights market interest, though it is not a commercial deployment. Target markets. NNE is actively marketing its microreactors for defense, data centers, mining, and other applications, though it does not expect commercial product launches until around 2030. This is the latest I can find. Again, if you got any other updates, let me know. But what you're seeing with the 6 or 7 stocks, I'm working on a members video to kind of show this and now. It's not you can't make money with them. It's not that they're not going to go up huge and all this crazy stuff, right? Because it shows you, right? It's not about what fundamental and all this stuff that moves the market, right? I mean, look at Intel. Nothing improved on fundamentals. They just went out begging everybody for investments and the stock's going up huge, right? Well, this is the same thing. All 70 stocks do the same thing. They're all low float, highly shorted, most on the Russell. Some, I don't think any of them actually have revenue. And they have these products where they hadn't gotten the proper licenses yet, and maybe we don't have projected sales for 2 or 3 years. But that's where it reminds me of 2020 and 2021. Remember the SPACs, the SPACs, they would come out $10 a share, and it didn't matter if they had sales, didn't have sales, pre-revenue, whatever, didn't have the licenses. What they do? They all ramped. Now, of course, they all crashed and burned, right? Because it was always like, oh, look at this. The sector could be worth $2 billion or $2 trillion or whatever it was. It didn't even matter. Like once momentum gets behind these stocks, and the SPACs actually had way bigger floats, right? Way bigger number of outstanding shares than these do for sure. So again, what you're seeing is in these stocks and a lot of the other stocks is, think about this. The CEO of Robinhood said this the other day. There are 20 million subscribers to Reddit alone. Do you know, I mean, I don't know the exact number. I'm trying to find this, and you do let me know. I'm getting a ballpark on this. I'm trying to research this. But trading rooms alone, they have grown so abundantly since 2020, okay? We're talking about millions upon millions of retail traders that, one, these trading rooms are actually linked in a way to where you'll see it on Twitter. I know you've seen this before. You'll see there'll be one trade group that'll say, oh, make sure you're following these folks, and they'll list out like 10 or 12. And then when you start looking at the followers, just on Twitter alone, hundreds of thousands each of them have, right? So you're talking about millions. And so when they're sending out trading alerts, you'll see NNE or Okla or whatever. It'll get sent out in maybe one trade group, and then all of a sudden it starts popping up in all the other groups. And this is a worldwide phenomenon, right? And everybody starts to follow, because in these low float stocks, especially when they're highly shorted, you can move these stocks, right? You don't need Wall Street to come in at that point in time. Because in some of these trading rooms, you're talking about people that ain't getting out of bed unless they're buying 10,000, 20,000, 100,000 shares. Okay, it's a different world than it was pre-2020. All right, so you got to understand, after GameStop, that shifted the whole picture on things. And so, can these stocks go up? Yep, you can see it. They're massively up. Look at Oklo. Look at these others. I'm researching. I mean, it's crazy. You just got to catch them at the right time to ride them up, and understand when they drop fast. They drop a lot faster. So, I was telling the members in the weekly write-up, that's what you're seeing. Like Oklo's down 25%, in 2 or 3 days, just like that. But it's also been up like unbelievable amounts, just rising straight up like a little cliff, right? And so big reward, big risk. Okay, that's what all these stocks are. Here's another one. Somebody asked me about, 2 people asked about this. What do you think about Symbotic? And the ticker is SYM. So somebody else asked about it as well. And when we look at this one again, you can see a little double top action there. Another high flyer. It's moved like crazy since April 7th, tripling, okay, from like 20 to 63 bucks. And when I see a chart like this, I automatically know. I said, boy, I bet you this thing is highly shorted stock. I bet you it's a lower float. You know, I'm going to simply say, well, low float's 20 million. I'm going to say lower float, much lower float, right? But just putting in your support levels and stuff. I mean, 43 support, 52, 07, 63, 92. You know, those are where you want to see it hold right now. And especially the zone at the bottom, because remember, the support's not just a line, but, you know, the zone at the bottom here, because what you see is an M pattern right now. Does that mean it has to follow through? No, not at all. It don't have to follow through. We saw it to the left. It actually did play out over time. And if that happened, that means this thing would come all the way down to like 24 bucks. Does that mean it has to happen? Absolutely not. Okay, first you got to break that 43.10 level, I believe it is right there. But you can see, I mean, you see it played out right there even more. Okay, so remember, high risk, high reward. This one, at least for this one right here, it's not pre-revenue. This one actually has revenue. It's in these themes. That's another thing too, is the themes, right? Energy, robotics, quantum computing, that kind of stuff, okay? And the level you don't want to break on this thing is between like 37 and that 42, 43 area. But at least this one, you know, you can see, what's the float? 44 million right there, 110 million total shares outstanding. Huge short interest on this thing. Again, I don't know if that's been updated or not, but at least they have sales. You know what I'm saying? At least they have sales. And so you go on their website, they've sold stuff. It's in the robotic sector. It has AI in the name, right? AI powered software, all this fun stuff. And you just start going through the financials and see what you're looking at and stuff. And that's what you got to do with these kind of stocks. It ain't too hard. And you can see what the projections are. They report a revenue of 592 million, net loss of 32 million at the end of the latest quarter right there. Again, cash equivalents, 177 million. Totaling around 778 million by the end of the third quarter as far as sales. And the fourth quarter, they expect around 590 million to 610 million. And so again, not pre-revenue. So at least it actually has revenue. But when you look at these stocks, I mean, I promise you pull all of them up, it's just this checkbox of things, right? That they got to have. Okay, it's got to be a lower float, not super, you know, it can't be like, oh my God, I have 10 billion shares outstanding. Highly shorted a lot of times, usually coming off the Russell. A lot of them are pre-revenue. It's better if they actually have revenue, but it don't seem like the market really cares, right? Because again, some of these companies, it's going to be a year, 2 years, 4 years. I mean, but that's not what these stocks are about, okay? And so it's just, you know, quantum computing, right? And people keep buying them up. Then when they come down, they're buying them at these certain levels, okay? And if it pays off, great. You know, and most of them are just swing trading. That's what they're doing. And riding it up. And in these trading rooms, what they do is they'll say, oh, we're going to buy this right here. The people that run the trading room, and, you know, they've already bought it. When they send out the signal, it's already going up, right? The people will come in and say, cool. And they'll start buying options and the shares on it and start shoving this thing up like crazy, start squeezing, and they start just ramping out. So they do 25% taken out, 50% taken out, and they'll let the rest run for funsies, as they say, and set a stop loss on it. I mean, that's what's happening. That's why you've seen these massive swings, not just one swing, massive swings. And the market just keeps melting up with it. So the market's been behind it. You see what happens when the market turns at all? Like the S&P down what, like one, I don't know what it's at right now. I'm looking at this, probably 1.5 maybe 2. You know, and some of these stocks are down 20, 30%, just like that. And imagine if the market were to turn 5, 10% down. You know, and then what's going to happen? When the market turns, they're going to run these stocks right back up. As long as those themes are still out there, okay? That's what you're looking at. So again, you know, it's up to you what you think of those companies. Okay, just remember, the only thing I say to you is high risk, high reward. If you've been running it up, that is fantastic. Love it. Hopefully they go to the moon. You know, and if they ever do, like, I mean, I've always, especially for the energy companies, I've been saying this. I hope they have the breakthroughs. I hope they come up with this technology and does something, because we're going to need it. But it is a hard sector to break into. You got some conglomerates you're competing with. And there's a reason why all that red tape is in place. It could have been removed a long time ago. They want the red tape there. It is hard for newer companies to break through when there's all that red tape. You just got to remember that. Or the other thing you hope is some of these companies get bought out by the larger companies. That's probably even better if you're holding those shares, right? So you just got to be able to stomach the drawdowns, or know when to get out, that kind of stuff, and know when to get in, right? So I hope that helps. I know it's kind of probably vague or whatever, but that's what I'm starting to find with a lot of these companies, or have been finding for quite a while. With a lot of these companies and stuff. So anyway, hope you guys got some out of it. Tomorrow we'll set up the week for sure. It's going to be another fun one. I have no doubt about that. Hope you enjoy the rest of your weekend. I got some family in town, so we're going to go hang out and stuff and eat some seafood and watch some football and things. So I'll end up seeing you guys tomorrow.